Yeah, good morning, everyone. So yesterday the market was choppy in the US market, mainly driven by the statement from the Fed chief, which initially indicated that the inflation is working in their favor and coming off. But thereafter also indicated that the interest rates are not so high and they are not they are likely to remain there, and they are concerned about the uh, inflations and interest rates can remain continue to remain high. So assets market remain volatile and ended the day in loss. And apart from that, Iraq, Israel conflict continue, wherein Israeli Defense Minister had said that the troops should prepare for going inside the Gaza area and do ground can do ground operations. So that has created bit negative sentiment, and oil also went up because of that and moved up by almost around $2.5. So, and bond yield in the US at one point of time crossed even 5% mark, but thereafter it came off. Now it is more of at the yesterday same level of around 4.995. Uh, so, and looking at this, even the Asian markets are quite dull. Most of the markets are negative. So overall theme sentiments a bit negative, and the same situation can be seen will be seen in the Indian market as well. So we'll see today more of a downward opening and thereafter remaining in a range, or may see some bounce from there because the levels which it will be coming will find some support. So now request technical team to take up from here.
Thank you, sir. Good morning, all of you. We saw last few trading session, Nifty open a gap up and gap down. Today again, Nifty open a gap down, but open near the support zone that comes around 19,540 to 19,500 at downside. If Nifty managed to sustain this support and reading above 19,570 again in intraday session. Then we expect again pullback rally towards 19,670. But if Nifty close trade below first half 19,530 and 40 level, and I break the 19,500, then we expect further sell off towards 19,370, at downside. So today's first half, we saw first 1 hour, if Nifty managed to sustain 19,500, 540, then we expect some pullback. Otherwise, Nifty trading below that range, then we expect some pressure towards 19,400. Upside for first immediate resistance place 19,640, 670. If Nifty pull back above and sustain the 9670, then we expect further rally towards 780 and 800 in upside. Bank Nifty also trading around near the support zone around 43 600 and downside 43 450 range. If break that level, then we expect further. Otherwise, this is immediate support for Bank Nifty. Last few trading session, we saw that Bank Nifty trading near that range. Next immediate resistance place 4480 and 44,310. Second, Nifty, Fed Nifty also trading near the support zone, and today also again open near the support zone around 19,580 and 19,470. Immediate support place is 19,580. Below that, next 19,470 is the next support for finance Nifty. 19,800 is the immediate resistance. All three index again today's session open a gap down and near the support zone. We expect if Nifty manages to sustain first half, then we expect further rally. Otherwise, we saw that trading near the support zone. Stock PCP, Lemon Tree looks positive in mid cap. We expect some positive momentum in Lemon Tree. Weekly chart is strong indicator. We expect some positive momentum towards 130 at 140 in upside coming 1 to 2 week. And downside support place around 115, 140. Second, Canara Banks also looks positive. Yesterday closed about 372. We expect some positive momentum towards 384, 386. But today's open above 374. Then we expect this rally. If Canara Bank open 374 and above, then we expect 385, 86 in upside. Downside 366, 364 is the immediate support for Canara Bank. That's it for technical derivative. I can.
Yeah, thank you. Good morning, everyone. So on the derivatives front, as I am continuously saying that the Nifty is trading in the supportive base of 19,500 to 400 level. Well, in the yesterday's session, we have seen that the OI positions has been added up sharply near 19,600 to 500 strike for the put writer. Almost around 13 million positions has been added at 19,600 level. So this is a positive sign for the market. But against it, that we are seeing that 9 million positions of a call writer got added at the 19,600 level. The change that took place in yesterday's session as per the OI positions is like the double OI of a put writers has been added against the call writer position, while PCR OI also shooted up. PCR also shooted sharply from the supportive base of 0.78, giving a close near 0.92 level. Another data point is India VIX. India VIX, we are continuously seeing that it is trading below 12 level. Yesterday it gave closing near 10.90 level. So till the time India VIX is trading on the lower end, till that point of time we might not expect a healthy movement in the market. We will see market to be in the range of 400 points, because once if India VIX goes above 13.5 level, then only we might expect the market range to be almost around 800 to 900 points. But till the time it is trading below 13.5 level, at that point, till that point of time, we might expect market to show some reversal sign from the supportive base of 19,400 level. So till the point of time, Nifty is not going below 19,400. Till that point of time, we should not get a panic for any new short positions in the market. We might see some pullback from the supportive base. While on the overall front, we expect in today's trading session market to see some cautious momentum in the first half. But again, if Nifty manages to hold support of 19,500 to 450 base, we might see some pullback towards 19,650 to 19,700 level. Once if Nifty in coming trading session for next 3 to 4 days, if Nifty manages to get stable about 19,800 level, then we might see some stability again coming in the market. But till the time it's not coming about 19,800 level, till that point of time, we might expect Nifty to remain in the range of 19,400 to 800 level in coming trading sessions. Well, on the stock specific front, we expect IT counter to show some positive strength in today's trading session. Yesterday, we have seen that short covering positions has been created in major IT counters. Selective counter which looks positive in today's session would be Persistent System. Cofor looks positive, while on the negative front, Coromandel and Deepak Nitrite looks a negative for today's trading session. So that's it from derivative front. Thank you.
Good morning. RVNL joint venture has received 2 contracts worth 420 crores in Vadodara. This is marginally positive. Elecon Engineering has received an order for supply and supervision of pipe conveyor system from ArcelorMittal Nippon Steel worth 51 crores. This is positive for Elecon. And PTC India has approved the sale of its unit PTC Energy to ONGC for rupees 925 crores. This is positive for PTC India. On the result side, Equitas Small Finance Bank result is marginally above expectation. Advances grew by 37% year on year and 5.5% sequentially. However, net interest margin continued to decline. They were at 8.4% versus previous quarter 8.8%, and before that in March quarter, it was above 9%. So the NIM has been disappointing, but on the other hand, OPEX growth was muted and credit cost also came below expectation, which led to a marginal beat in profits. Gross NPA declined from 2.8% to 2.3% due to healthy recoveries and write-offs. Net NPA dipped below 1% levels. Slippage has remained elevated at 3.3% versus previous quarter 2.9%. So we remain positive from long-term point of view on Equitas. South Indian Bank result has improved owing to lower credit cost. Operating performance was soft. Advances grew 10% year on year and just 1% sequentially. Profit before provisioning declined by 7% on sequential basis. However, credit cost came lower at just 0.3% versus usual run rate of around 1.1%. This led to profits coming at 275 crores versus a normal run rate of 200 to 220 crores. Net NPA continued to decline. It was at 1.7% versus previous quarter 1.9%. So overall, decent set of numbers. We remain positive on South Indian Bank. Thank you.
Good morning. CN posted above expectation numbers for the quarter, with dollar revenue coming in at $214.9 million versus expectation of $208 million. The company maintains FY24 DET revenue growth guidance to be in the range of 15 to 20% year on year in CC terms, wherein the company guides to be at the lower end of the guidance. FY24 DET normalized EBIT margin is expected to improve by 150 to 250 bips year on year, which was also guided earlier. Stock is trading at a PE of 25.9 times FY24 EPS. Mphasis has posted marginally below expectation numbers for the quarter. However, TCV is strong. Dollar revenue came in at $398 million, impacted by delayed start to revenue conversion versus expectation of $404 million. Net new TCV for Q2 FY24 stands at $255 million. With this H1 FY24 TCV stands at $961 million. The company expects sequential revenue growth through remainder of FY24, excluding M&A charges. EBIT margin is expected to be in the range of 15.25 to 16.25%. Stock is trading at a PE of 25.3 times FY24 EPS. Thank you.
Good morning. Yesterday, Polycab India Limited hosted its con call for the quarter performance. The management maintained its revenue guidance of rupees to 20,000 crore by FY26, and overall EBITDA margin guidance is in the range of 11 to 13%. The capex is planned at rupees 600 to 700 crore for each FY24 and FY25. While commenting on the top line performance, the management highlighted that there was a sustained growth in cables and wires segment with 28% YY growth, which was driven by domestic distribution as well as growth in the institutional segment. For the North region, observed higher sequential growth, and sales from Southern region grew by 90% YY. On the FMEG front, revenue grew by 8% on a YY basis. In this segment, except fans and lighting, all major segment has observed good growth. Company strategically looking to change its product mix and focusing on the switched and switchgear segment, where it enjoys high margin due to limited competition. It expects FMEG EBITDA margin to achieve at 10% by FY26. So we are positive on the stock with the long-term investment view. Nestle India Limited posted result was above expectations. The company has crossed a milestone of rupees 50 billion revenue during the quarter with a 9.7% growth on a YY basis. Domestic business grew by 10% on a YY basis, while exports declined by 9.6%. Gross margin stood at 56.5%, which grew by 380 basis points on a YY basis. This is highest in the last 7 quarters. And high gross margin was partially offset by higher employee expenses and other expenses. The adjusted PAT grew by 20% on a YY basis. Also, Nestle has declared the interim dividend of rupees 140 per equity share, and it has proposed a stock split in 1:10 ratio. While the company is currently trading at an expensive valuation of 58 times to calendar year 25 EPS, any significant correction might provide an opportunity for the long-term investment. Hindustan Unilever Limited reported numbers which were in line with expectation. During the quarter, there was a one-off credit from favorable resolution of past indirect tax litigation, which has benefited both top line and bottom line. Excluding this one-off, the underlying sales growth would have been 3% and underlying volume growth would have been 2%. Also, PAT growth before exceptional items would have been 7% on a YY basis. The company's gross margin improved by 700 basis points on a YY basis, which were at 52%. And the company's A&P investments stepped up by 700 crore. This is to maintain its competitive position. The stock is trading at a PE of 48 times to FY25 EPS, and we are positive on the stock. ITC Limited revenue and net profit reported in line with the expectation. The standalone revenue grew by 2.6% on a YY basis. Cigarette segment revenue was up by 8.5% on a YY basis with the resilient volume growth of 4%. Hotels business saw strong performance with revenue growth at 21% on a YY basis. Overall gross margin expanded by 30 basis points. Adjusted PAT grew by 10.3% on a YY basis, where lower than expected profitability in paper and paperboard business and agri business was offset by higher other income. The stock is trading at a PE of 26 times to FY24 EPS, and our outlook is positive on the stock. Thank you.
Good morning. Ramkrishna Forgings result came out and it was in line with expectation as revenue came at 864 crores, which grew by 3.4% on QOQ basis and 13.4% on YOY. With stable raw material and power and fuel cost, EBITDA margin came at 22.9%, which grew by 50 basis points on QOQ basis. Stock is trading at PE of 33 times of FY24 EPS. Thank you.
Yeah, apart from this, Voltas came up with the number. Apparently looks bad, but there is a one-off of around 86 crores, which company has provided for its project business, wherein they provide for the delay payment. And the 86 crores, if we exclude, then the result become more of a in line. Cooling product revenue grew by around 15.4%. The expectation was that the growth should be around 15%. And even EBITDA margins were at around 7.7% as compared to last year, 7.3%. So which is also in line or marginally ahead, whereas the project business revenue though has grown substantially by 66% year on year. But the EBIT came negative at around negative 49 crores, but that is mainly because of one-off of 86 crores. So if we exclude them, then there is an EBIT positive of 37 crore, which is around 4% margin, which is the run rate they do, or it's marginally over that. So overall result is okay, in line. Only thing is because of the apparent bad result, if the stock open lower, it can give an opportunity to buy the stock. Apart from that, yesterday some statement came from Amit Shah, Home Minister, which is indicating that NMDC steel, which is uh, separated from NMDC and now held by the government, uh, will not be sold immediately. So that is to a more of a populist announcement. So, but that is indicating that the sale of NMDC steel may not be happening before the election. So that can act as negative for the company in near term. Then Aarti Drugs came up with the numbers, and company was not able to show improvement in the margins, mainly because of the higher operating cost, though gross margin saw some marginal improvement, but still very less than what the company was guiding earlier. So this stock can say negative reaction into this trade. Then Havells India reported negative numbers. In fact, the growth in the Polycab of wire division was substantially higher, whereas Havells India was able to show only 6% growth. So they are losing market share. So, and apart from that, also the other division, the growth was also slower. Though there is a shift in holidays in festival season, and because of that the sales will be moving to third quarter from second quarter, but looking at the Polycab growth in cable business, Havells had shown lower growth and will have impact on the share price today. So may see negative trend in today's trade. Apart from that, Ultratech has given very good guidance for the coming period. They has indicated that the volume growth is strong, and apart from that, the price increase which has been taken in the October month post monsoon season are holding up. There is an average price increase of around 5 to 6% in most of the regions. So, like Dalmia Bharat, what they had said about South and East, now Ultratech has indicated for the whole India, prices has increased and are sustaining. So, coming quarter result will see benefit of price increase of in on the EBITDA front. Apart from that, they are holding low cost inventory of the pet coke and coal. So that will also lead to some reduction in the fuel charges, uh, fuel cost per ton in the coming quarter. So next quarter result seems to be very exciting and likely to show positive trend for not only Ultratech but other cement company also. So outlook for cement company in near term are positive. And I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So today also we are expecting gold and silver to trade positive. Overall prices in gold are expected to test 61,000. Buying on dips is recommended. In silver also one can initiate a buy around 71,900, 71,800 and maintain a stop loss of 71,300. On upside again 73,000 is the level we are looking for to take profits. Crude oil also will remain positive. Buy on depth strategy is recommended in crude. One can initiate a buy around 7,400 and maintain a stop loss of 70 to 30. On upside, again, 75, 50, 7600 is the target we are eyeing for. In natural gas, we have seen prices are drifting down, witnessing profit taking, but it is approaching the support area of 245 to 240 levels. So again, these levels are level to accumulate, and one can maintain a stop loss of 237. On upside, again, it can test 255 on upside. In metal front, it's trading in a very narrow range. Copper, we are witnessing a range from 705 to 695 levels. So trading in this range is recommended. Also, zinc, we are witnessing a range from 217 to 221. So trading within this range is recommended. Metals are a bit lackluster, but the momentum should continue in gold, silver, and crude. That's it from us. Thank you very much.